Well, it gives me great pleasure to host this first panel today on confidence to set your carbon market strategy. For those of you who don't know me, I'm Adrienne Gormley, COO of Silvera, and I've spent my entire career in fast-paced, disruptive tech industries. And I don't think that any of those industries can even begin to compare to the journey that the carbon market is on in terms of, I would say, uncertainty, in terms of urgency, and of course, in terms of the impact that this has on all of us and future generations. Al has touched on a ton of issues to why it is so difficult. Issues on transparency of data, issues on governance, compliance being fractured and fragmented. And all of this means we have a lack of confidence and a lot of confusion when it comes to setting strategy. So today, I have an amazing panel of experts who are dealing with this in their day-to-day. And they're going to share some best practices and some of the ways that and tips that they have to navigate effective carbon strategies. So please join me in welcoming Sean Kane, a partner and global co-leader of sustainable investing at McKinsey. We have Max Scher, VP of Sustainability at Salesforce. And last but by no means least, Marissa Hamsek, GM of Strategic Carbon Markets at Chevron New Energies. So first of all, I would love you to spend a couple of minutes just giving a background on the role that you're doing and the careers that you've had, and then we'll dig in a little more.
Sure, I'll start. Thanks for having me. So at McKinsey, I have the vantage point of working closely with a number of investors. So think about the pension funds that are trying to think about portfolio strategies, what they're willing to commit to, how are they going to operationalize engaging with their portfolio companies. Worked with several of the newer climate funds that have come to market across developing those fund strategies, diligencing assets, and working closely with the portfolio, including building some companies from scratch in and around this space, which has been fun. I also get pulled into working with corporates as they're thinking about a broader view on sustainability and a little bit of what is the business case for sustainability. And I think that that the jury is still out there, and so we'll come back to that. And then McKinsey is a buyer of carbon credits. We've been active in this space for several years. We have also been behind the scenes working with several of the integrity initiatives, trying to put forth research and analytics. And so I think McKinsey does believe in the power of carbon credits and the point that we need all of this alongside in value chain emissions reductions and adaptation and resiliency. So excited to kind of bring that broader view.
I'm Max. I've been at Salesforce for about 9.5 years. I think of myself as kind of a steward of our climate strategy. So this week is like all about our climate transition plan and year for me. But one of the things my team does within that strategy is think about all things market-based mechanisms and beyond value chain sort of action. And Salesforce as a company, we've been buying carbon credits since about 2017. And for our full scope 1, 2, 3 now since 2020. Our basic strategy is, we'll talk more about strategy, our basic strategy is like buy the best stuff we can get today while trying to make better products for tomorrow while we try and scale demand. So we got a bunch of different initiatives for that. I feel like we're just a joiner at this point of all the things. So we're in the ETA, we're in the LEAF Coalition, and really excited about symbiosis at the moment. Just joined Frontier. We also have a $100 million CDR commitment related to the First Movers Coalition, so we're out there, we're committed. It's been interesting, yeah.
Hi, I'm Marissa Hamsek from Chevron. I joined Chevron about 3 years ago when Chevron started Chevron New Energies, which is a new business unit that is designed to build businesses and advanced technologies that can help decarbonize our base business and build businesses for the future. So that's hydrogen value chains, carbon capture, utilization and storage, emerging technologies and things like geothermal and carbon markets, which is where I sit. And just a little bit about our strategy. When we think about carbon markets, we think a little bit more broadly than just the voluntary carbon market. We are in the part of the market that is an investor, so we're not necessarily procuring credits for today or for tomorrow. We have a trading arm that can do that if we need that. Our role at Chevron New Energies is to be an investor in underlying emissions reductions activities that we can use as offsets either in compliance markets where we're regulated, so places like California and Australia, or in the voluntary space, and that might be for our net zero aspirations at mid-century or potential interim targets prior to then, as well as potentially using offsets for our customers. So things like offset paired jet fuel ahead of SAF being available, or offset paired LNG to help our customers on their lower carbon journeys. And by way of background, I've been in the carbon markets for about 20 years, so I've kind of seen it all. Started my career in Australia doing sustainable forestry investment, spent some time at the Nature Conservancy, and then also at BP before joining Chevron.
Thank you. So quite a wide range of exposure and experience. Maybe we'll start with, from your perspectives, the most common challenges that you see when leveraging the carbon market to execute on a net zero strategy. Maybe, Max, you can take that one to start.
Yeah, I'm happy to. I mean, I think two fundamental challenges here, just supply and demand. On the supply side, I'm happy to talk more about it, but I'm kind of bullish. I think in a bear market like this, you kind of like get your stuff together and figure a lot of things out, and I see that happening. Like I said, I'm particularly excited about symbiosis. I think one of the challenges is like, how do you actually define quality? I like some of the stuff you guys are doing at Solvera to figure out what that looks like at an early stage project. I think one of the challenges as a company is being so confident in what that looks like that you can contract for it for something that's not going to exist for like 15 more years from now. But that's what's needed to actually, if you want to like leverage, you'll probably talk more about this, but if you want to like leverage the large commercial capital that could be deployed in this space, you need like actual buyers, and they need that sort of confidence. So I think that's one of the challenges. The other big one on the demand side is just like, how do you get credit for any of this? How do you communicate it? So my anecdote is like, I think we're going to keep doing what we're doing. We're going to keep, buying for our scope 1, 2, 3, but I'm really not sure what to call it anymore. I might not call it anything is kind of where I'm headed. Just as like I don't know, as a statement of how crazy the situation is. But that's a challenge because it means there's less demand, which means there's less scale, which means there's less reps and learning for the market, which makes it harder for us to reach our goals too.
Great. Marissa?
Yeah, and just building on some of those themes, I mean, I think one of the hardest things right now for buyers is just really understanding the right role for offsets in our mitigation portfolio or our abatement portfolio. So Chevron believes that offsets have a role to play in a lower carbon future, but exactly what the balance is between internal abatement and the use of offsets and the way that you communicate that, the way you gain alignment internally around that is really challenging. And there's no guidance out there saying thou shalt use X% for scope 1 and 2 emissions and a different percent for scope 3. It's kind of all over the place. And as we know, there's some conversations really trying to restrict the use case around offsets. So we feel like it's our job as experts in this space to really build the internal OC, the internal capabilities, to explain to leadership the role that offsets can have as one tool in the toolbox on a lower carbon journey, as well as the risks and the costs. But all of this has risks and costs. Doing internal abatement is also costly and risky and requires a lot of internal alignment. All of this net zero transition it needs to be managed through the lens of the value proposition back to the business, whether it's an offset or some kind of other activity. And so it's our job to bring that kind of expertise in-house, be able to understand the supply side and give our organization confidence that if we invest in something, they're buying more than just reputational risk, they're buying a real climate solution, and where that sits in our portfolio of other options for our abatement strategies.
So my wife is a lovely woman. She's also a corporate lawyer. And whenever I talk about voluntary carbon market, she's like, okay, so the credits are voluntary, but the commitments, the corporate commitments, those are legally binding, right? Okay, no, those are also voluntary. Okay, but then the contracts, when you sign up the offtake, those have a ton of legal recourse too. And I'm like, okay, no, those are also a little bit binary. And so I think there's a bit of a challenge here around, where are the penalties going to come through? And I think, because if you think about what's happening, and I'm seeing this in the corporations that we're working with, is some of these targets were set by the visionary CEO that was pressured by the board, or thinking about seeing their peers on CNBC, and they jumped to the conclusion, then we'll figure it out. And now it's sliding down to the desk of the CFO, and the dollars are starting to go up, and this question around, okay, well, are these really more assets I can put on my balance sheet, or is this a liability, not just in the reputational sense, but we're starting to see real costs start to accumulate. So I think we really need to think about sharpening the business case, and how is this creating increased share of wallet with your customer? How is this starting to reposition your attractiveness to investors, to employees? And I think we believe conceptually that it's there, but I think we just need to do a lot more work. And I think about just some of the evolutions around scrutiny, and I just wonder if we really also need to paint the bigger picture around the risk of not succeeding here. And everybody that says the voluntary carbon markets are just an out from really holding people accountable for in-value chain emissions, I'm like, well, you're naive around that's why people aren't doing in-value chain emissions. Like, there are a lot of other reasons. It's really hard, and it's really expensive, and we've all seen the cost curves. And if you tell me there's a mechanism to move things from the really expensive part of the carbon abatement cost curve to the simpler, to the cheaper part, and whether that's across borders, it's across industries, like, we need to pull every lever. And so I just think that creating that sense of urgency is probably going to require even more stark articulation of the both economic and, frankly, the impact on human life. And frankly, I think we're going to need to see some really bad things happen before people really wake up at scale, because this is a bit of the group of the converted, and I think we need to scale up the case for change a bit more broadly.
It's a really good point, and this room is a very receptive audience, put it that way, to what we're saying. But picking up on points that you've all made in some shape or form, how can we more effectively communicate to stakeholders in the business what has succeeded, what has worked for any of your companies or your clients in terms of getting it out of the sustainability teams, being able to talk to C-suite, to boards, to procurement, to whomever, to sell the case?
I can start, yeah. So I mentioned I'm in the middle of our climate transition plan right now, and it's one thing that I'm super bullish on as the thing that will hopefully help companies make the business case for all sorts of climate action, because it fundamentally puts it in terms of risks and opportunities for a business in your enterprise risk management framework. So I think once we start to see, because I don't think companies are really thinking about this, what are the long-term impacts on my business from all these different, different vectors of both physical risks and transition risks. I think it really does start to make the case, even for a company like us, we're a technology company, we're not the most exposed of all the companies out there. It does really start to make the case for climate action. And one of the things that we're finding is, you cannot hit your goals, you cannot mitigate the risks if there isn't global progress on climate action. And so that's one really good argument for carbon credits and going beyond your value chain and your own emissions. I think the other piece of this is the regulation. This is one thing that I'm excited about. I hope it turns out this way, but the regulations ask you to think about your impacts, right, and how you're going to address them. And emissions reductions are only one way. The impacts is actually like climate drivers at the end of a whole rainbow of you have human activity, and then emissions in the atmosphere, and then warming, and then climate impacts. So there's actually a rainbow of activities, including compensation and adaptation, that start to figure in there over time. So I'm bullish that companies will start to do that, and things like the due diligence directive, something like that might actually put teeth behind some of this for companies. It hasn't happened yet, but that's my bull case for this market.
Nice.
And just building on some of what Sean said in terms of internal stakeholders, it really all starts with having an aligned point of view on the value proposition across the company. It is very exciting when the CEO and the C-suite say, go do this. It is much harder to then get a deal through your investment committee when finance and treasury and legal and the business unit and the traders all say, what? Because what they come back to, as Al was saying, is why are we doing this? What is our strategy? It sounds great to go do conservation overseas or do restoration, on marginal ag land, but why would an oil company or any company do that? It's so far outside of our area of expertise. And so getting aligned on what the value proposition is and the why then starts to line up those other actors and helps get that investment case through. And the way that we've started thinking about it started, I guess, maybe a little bit more nuanced and sophisticated conversations, is a lot of companies might have started this journey a little bit more through the lens of traditional investment. We're going to go out, we're going to make investment in projects that's going to be cheaper than if we have to buy these credits in the future, and there's an IRR associated with that between maybe the cost basis of the project and actually what I might have to pay in the future. What we have to pay in the future is highly uncertain. It's very hard to predict that and to actually calculate those IRRs, although we try every single day. But what we do have a little bit more knowledge of and a little bit more control over is what is the internal cost of abatement to our company to do internal abatement, and what are the marginal costs associated with that. And then you can have a more sophisticated conversation about what are the different kinds of offsets that might slot into our marginal abatement cost curve. And what are the risks of that? There's different costs as you move up that cost curve for offsets and for internal abatement, different timelines, different risk profiles. And so that's the conversation we're trying to drive internally now, to have a more sophisticated conversation about the value proposition that all of these different stakeholders can align behind.
Yeah, no, I agree with these points. Maybe a different take around the power of analogs. And I think people are like, this is messy, this is painful. Are the carbon markets dead? And if you look back at other markets and how they've evolved, whether it's the equity derivatives or asset-backed financing, sovereign debt, it was pretty gnarly when those things got started too. And it was kind of some rogue traders that and people lost money, and people doubted the value of those markets. They doubted their ability to scale. But I think if you just think about what the good that these markets could do, also I want to motivate people commercially. And if I think about a bank or a trading desk thinking about carbon as the new commodity of the future, and if they move early, they can create a ton of value, then go early, be part of the sausage making. And so trying to tell people about the imperfection of these other journeys is helpful. And I even think about telling the impact story of, if you just think about the power of what Article 6.2, 6.4 could have for some of these emerging markets, where their options right now are issuing debt, often in foreign currencies, that they have to pay back in domestic activity, and it creates a ton of liability. And now if you could say, hey, I can issue $1 billion of carbon-based finance and sovereign carbon, that could be 5, 7, 10% of their GDP in some of these economies, that is a massive game change for what they can do in terms of funding their economy. So I think unlocking these impact stories that are all grounded in real market mechanisms, and then I do think trying to tighten up a bit of the legal recourse, the kind of security structure here, so that way we can really start to kind of step up into the more mature financing and underwriting entities that are out there that can step in as helpful intermediaries.
Well, to build on that, Sean, and maybe I'll go to you first. So we've talked about how you can communicate and try and persuade. We've talked about the challenges. But how do we build that confidence to invest in the carbon market? And how can we have carbon credits viewed as real financial assets? And how does that scale?
Well, so I've diligenced a number of different assets. I mean, part of this is laying out. I mean, there is a lot of techno-economic analysis that you can do. I mean, we've looked at all these carbon removal vectors. We've looked at nature-based, and I think putting out a very unabashed view of the imperfections of some of these technologies, and whether you want to look at the thermodynamics or the water usage requirements of different direct air capture technology, let's understand what it's going to take to scale. And do not try and paint too rosy a picture, because the investors will smell it. They will get spooked, because then they think you're trying to pull one over on them. And just be clear about where things are. And then I think from the corporations that I'm working, I do think there's a bit of some of, whether it's the large logistics companies that have committed to SAF targets or electric vehicle targets, I mean, or some of these other players, like I think kind of banding them together and saying, hey, like, if one of you blinks, you guys are all gonna blink. Like, that would be bad for everyone. And one thing I'm scared of is if we start to have some folks drop out of the net zero, if we have a couple public defections, that could be really damaging. And so how do we make sure that we continue, whether it's the alliances or just, kind of showing the customer demand? So another thing we do is we do a lot of customer research. It is not every single one of the large corporations' customers that cares about sustainability or pay a premium, but if you can isolate and show it's this segment in this region and this is the magnitude of premium, or they're just this much less likely to churn or switch to a competitor, and you can bring that data to bear, even if the business case is incomplete, we just need to bring it to life and put climate and sustainability and carbon alongside. What are you doing as you're thinking about investing in your supply chain? What are you thinking about investing in IT? It's got to stand side by side with everything else that the CFO is debating. And even if it's not the best business case, put it up there. And if it's fifth, it's fifth. But we just need to be able to put it up there and not believe just because it's the right thing to do, it will get funded. Put out the straightforward business case, and then it's also the right thing. So then, maybe you give it a little bit of nudge, but don't try and say it's the only reason you do it.
Right. Anything to add on that?
I think you got it.
So looking at the future and the trends that you see, emerging trends, whether it's across new market entrants, technologies, regulatory changes, maybe talk a little bit about what you're seeing there.
Yeah, I can start. I think there's a lot of things on the horizon right now, and these won't necessarily be surprises to you, but when I started thinking about them and listing them, I thought, wow, this could be kind of a watershed year, or watershed kind of 6 to 8 months. Obviously, we know there's a challenge with demand and when that's going to return in a really big way, but it seems that there's a lot of things that could tip one way or the other. I'm thinking about things like what SBTI is going to do when they're going to make decisions, and what that does or doesn't drive for Scope 3 and therefore competition in the market. One thing that we think a lot about is there are credits out there, high quality credits that you can go buy and procure today, but actually exactly as Al said, and I would love to see more of that data, that when we think about the supply of high integrity credits for the future, it seems like that's going to be tight. It's hard to get your hands on the highest quality projects and work with the best developers in jurisdictions that you're comfortable with. So depending on what happens with SBTI and Scope 3, that balance of supply and demand can really shift. The full implementation of the CCPs, and again, if that further constrains supply and the market signal it gives to future investment, and then keeping an eye on kind of what's happening in California and the EU, and I think we're talking about policy in a later section, but there's been some indications that governments are challenging the role of offsets and the validity of using offsets for various use cases. So keeping an eye on what happens there, that can be really bearish for the market. And then CORSIA is the other one that we think a lot about. Is that going to suck up a lot of supply in the market? When might that hit? What kinds of credits ultimately will be eligible in that market? And just how that could shift the supply-demand balance as well.
I can continue my bull case, I guess. I'm not sure how many companies are in the room. I imagine you're like a lot of investors and hope this market flourishes. But the conversation with the companies right now is actually, it's pretty heartening to me. Like behind the scenes, you mentioned SBTI, like behind the scenes a lot of discussion is, what SBTI is trying to present to the world is not a, full articulation like evaluation of climate leadership necessarily. It's one piece of a big puzzle, which is like emissions reductions, but that there are important other pieces that we want to be recognized for. It's not to say it's a substitute, we would never say that, but it's an addition to sort of factor. And I think there is just like growing momentum to figure that out. Like what is the framework, what is the mechanism so that I can say like, I'm a climate leader because I have an SBTI and I'm also doing X, Y, and Z, including carbon credits. So I think there's essentially this like trend from my peers that they're just kind of over it. They're ready for that to exist. which is really heartening to me, as it's something that we've been fighting about for a long time. I think we're getting close. We're getting close. Yeah.
I'm loving the bull case. We're going to go to questions from the floor. So you'll see a couple of Silverans with roving mics, Cam. But while everybody's thinking of questions that they would like to ask the panel, one last parting piece of advice to people in the room in terms of being effective in their organizations.
Yeah, I mean, maybe I'll go back to this point of you need to start with probably a perception that you are being viewed with a fairly skeptical lens if you are trying to push this internally, and like even just come with that insecurity. And so, do your homework. Build the business case. Like, do the market research. I also think like bring some. Again, I've seen some really interesting things happen when corporations or investors start to realize that their competitors are ahead of them on something. And like competition is fear is a very powerful motivator here. And so I think being able to tell the stories that are inspiring and positive around, the things that you should be basically proud of as a climate leader, but also helping people understand, well, if you don't do this, here's the headline for when our fiercest competitor launches that product. Or when we have this offset-based fuel offering and others don't, how much of our customers do we think just immediately churn? And so I think doing that, playing both sides of that would be a recommendation.
Yeah, and just building on something that I think Sean said before about being pragmatic and straightforward and honest about the headwinds, you gain a lot of credibility by being really clear about uncertainty, what's not working, the volatility. And we've always been surprised when we end up in front of senior leaders all the way up to the CEO that we sort of come in almost apologetic sometimes, are you sure you want to contemplate carbon markets? There's a lot of risk out there. And the answer back is often, we know we need this solution. Like, it's going to be incredibly expensive and probably technically impossible to get to zero. So we're going to have net zero. And we also know, looking back to just like fundamentals of the IPCC, that in order to get to a 1.5 or even 2 degree world, we're gonna have to deal with the land-based sector and conservation and restoration. And this is a reasonable way to fund some of those activities, as long as you can couch it in a business proposition and hopefully not just have it stuck in more of philanthropy or social investment. And also, deal with removals and not be afraid to talk to leadership about going up that cost curve and contemplating where more expensive removals could have a role in your portfolio, as well as less expensive avoidance offsets. There's, we at least right now where we are at Chevron, we're a, both and. We think all these solutions are needed, and it starts with judging projects on their merits against integrity criteria and doing great due diligence rather than categorically saying yes or no to particular project types.
I agree with everything that's been said. I think the business case is like what's going to get this to scale. But I do think the altruism sort of pitch is still necessary. Like, at the end of the day, when you're looking at someone, they're still a person, they're in the world, they're hearing all the things, they have a family and a place. So we still make that argument. We then go right to the business case. But I do think that's an important one to still do. And the reality is, like, when we talk about this with our executives, we talk about, even on a path to 1.5 degrees, we have a 1.5 science-based target, we're still going to emit every year. And every ton has an impact at the end of the day. And so if we actually want to reduce our impacts, we want to avoid these things, the fires near your home in California that you care about, we're gonna have to do more, and this is one of the ways to do it. And we don't say offsets at this point. We just say these are important investments to reduce those impacts that you can get behind.
Awesome, thank you so much. I'd like to say a massive thank you to Marissa, Max, and Sean for some fantastic insights. Thank you.